Okay. Sorry about the delay. Welcome everybody to Wall Street Reporter's next Super Stock live stream, where we bring you those stocks which have that 10x to 100x upside potential. Companies going after massive multi-billion-dollar market opportunities that are at a key inflection point, and there's multiple catalysts in place to ignite that increase in shareholder value. We've already had quite a number of these stocks that have increased between 10x, even as high as 50x in the past months. And again, we're always looking for that next big winner. And today we have back with us is XTM, paid on the CSE, XTMIF over the counter. Marilyn Schaefer, CEO. Marilyn, welcome back.
Thanks, Jack. Good to be back.
Marilyn, so a lot has been happening since you were last on. The company today had some incredible news. The metrics are going up. The GDV, which I think is one of the metrics you've been really using as kind of an indicator of what's really happening in the business. That's been trending up the last couple of months. Record months. You're also getting, I understand, a lot of new accounts coming in. The U.S. expansion is starting. So I think let's kind of start off with today's announcement, walk us through it, and we'll get into the further details.
Okay, that sounds good. Actually, Jack, why don't I show you? Because we prepared a small deck to kind of systematically take us through what led to today's announcement and give you a little bit more holistic idea of what's going on. So we're happy to share that, if that's okay with you.
We're going to do a show and tell here?
Show and tell.
Show and tell. Okay, hang on a second. Okay, see the slides. Okay, here we go. Go ahead. Okay. Give us the details.
All right, sounds good. I'll just give everyone a second to review these forward-looking statements, and then we'll move on to the overview. So you're right, Jack. Today's story is a story of growth. We have, to repeat, I think Zuckerberg's comment, we moved fast and we broke something. And what we broke, for those of you that are new to our story, I'm going to take just a minute to explain what we do. I hope there are some folks on here that are new to the story, because one of our biggest objectives is to broaden our investor base. But for those of you repeat, please forgive me for just maybe some redundancy. But what we fixed is taking cash out of the Canadian restaurant ecosystem. So where restaurants were dispensing cash tip out and requiring their operators to physically remove cash from a bank in order to pay out their staff, we have a free solution that digitizes that entire process. And it works with an app, a mobile wallet, and a debit card. And we rolled that out, as many of you know, people know, early in 2020, and we've had a lot of takers. We launched our MVP just before the pandemic. And the silver lining to that was that no one wanted cash anymore. And we had the attention of that audience to really grab onto our solution. We went public because we didn't have time to do a big raise. We had an MVP that we really wanted to test in the market. And so a group of investors who had other commitments and were looking for liquidity. So with $1 million, we took that platform that we had acquired, we verticalized it for the hospitality space, and within 18 months, we had market dominance in the Canadian restaurant space. And we feel confident that we were a going concern, we are a going concern. And we continue to build and monetize our platform, of which you're going to hear a little bit more about. So our management team, it's grown, even probably since you saw us last. For a while, it was just a few of us. Those days were tough, but today it's a different story. We've been able to attract top talent, and we've got a really good, bright, collaborative executive team. So Chad is our CFO. He's got an engineering and payments background. Paul, our CFO, with public markets experience and in-depth understanding of software and the dev space. Veer, new to our team. Veer is our internal GC and COO who comes from a successful transaction and acquisition for which he played a significant legal and negotiating role. And Jason, who you may have met online or through our company before, Jason is based in New York and has a broad background in hospitality as an operator and also as an executive, counseling VCs and large networks on M&A strategy for their food and beverage holdings. So that's our executive team. And as you can imagine, there's lots of people around us that help make it all happen, but we don't have time to introduce all those great people to you today. So what is our solution? It's, first of all, a robust and sophisticated platform. It's complex, full of IP. It runs flawlessly, and the primary solution or function is to solve and support instant payout that's triggered by a client. And I'm going to use the word, you're going to hear me say a lot about hospitality and restaurants, but that also includes salons and personal care services. So please know that it includes both of those sectors. So in Canada, the way the solution begins is an employer sends a text message to their employees, invites them to download the app from the iOS or Android store, and the restaurant owner or the salon owner or the spa owner distributes a MasterCard debit card to their employees. The employees link their app to their MasterCard through a QR code, and instantly that card, the wallet, and the app become their private digital account. Their balance updates with every transaction that they make, whether it's POS or in-store transactions. They can move money, they can spend money, they can pay bills, they can do everything they do from a traditional bank account. Here's where it gets really interesting. A great number of restaurants, specifically restaurants, fail, not because they're not great artists, but mostly because of the operational issues and efficiencies. We know that restaurant technology is about a decade behind. And with this great comeback of eating out and socializing, we see a roll-up opportunity with a goal to provide operations with best of breed one-stop shop for the hospitality ecosystem. We've done the hard part. We've got the payments side solved, and that's a very tough component. So a lot of compliance and governance and security involved in that. And we've built it, and we're using that solution. It's generating revenue. And now we have an opportunity to add more features and benefits that can be driven through the platform through integrations, mergers, acquisitions. So when you see this circle, this sphere, everything under the blue, part of the sphere, we already have. We'll talk a little bit about that. It's done. The others, through integrations, mergers, and acquisitions, we are adding to our core competency. And when we look at acquisitions, it's really important that we identify the ones that are critical to our ecosystem, but this target acquisition has to make sense. We have to be able to check off the boxes, that it's got the right valuation, the right deal structure, the right fit, and a willingness to be able to get busy and grow the value of that union with us. Sometimes you have to pull back from a deal because it's just not the right fit, but we don't. It doesn't stop us. We continue to work with a number of best-in-class providers that help flesh out our ecosystem, and we now have a robust, growing singular solution for the hospitality industry. Organically, we've got the gratuity management, we have the wallet, we have the wage management, we have a rewards program, and a tip pool solution. And we integrate for the others, for the other part of that sphere. So the two things that are, new-ish since we met last, for those of you who are repeat visitors, are EWA and tip pool. And why is that important? There's a significant labor shortage in the services space. So access to same-day pay dramatically improves time and attendance and recruitment. So if one restaurant is offering same-day pay, it becomes a competitive advantage. Now, administering that is not simple. It's complex. There are associated rules and regs and compliance, and we're on that. And we are now a forward-facing provider of EWA in the hospitality space. Tip pooling that you see on the opposite side of your screen is an area that are associated laws that regulate that side of things. So under the Fair Labor Standards Act, an employer has to notify tipped employees of any required tip pool contribution amount. And they can only take tip credits for the amount of tips that each employee receives, and they can't keep the employee's tips. So that sounds pretty simple, but there are a number of outstanding litigations, especially in the US, class action lawsuits where employees have gone after their employers for unfair distribution of tips. So what we have done is we've built, it's a complex calculation, but we've built it on two levels, both tip pooling and tip sharing, that enable both the employer and the employee to be able to see exactly, transparently, how the tips are being allocated in a fair and just compliant framework. So the issues around labor shortage and of course management is something we're addressing, and we're in market now with these additional products that we just talked to that go beyond gratuity management. We're bullish about our growth. We see a trajectory that is double-digit multiples month over month. And the way we're driven, the tailwinds that are driving us are reopenings, a resurgence of confidence in the hospitality space, and a lot of new restaurants opening. So super encouraging for us. And all of them are out looking for efficiencies. These stats help to indicate where we are on trend. It's a growth story, like we said. Big numbers. But to boil it down, I think two numbers that you really want to focus on is that there are going to be more and more employees recruited into the hospitality space. It's become a competitive market. Some restaurants in the US, many of them offering incentives if you produce or you generate a lead for an hourly and waged employee. And that's only going to grow more exponentially as we look through to the next, call it 5 to 7 years. How are we different? So one of our key differentiations is the fact that we, you might be inclined to compare us to a neobank, but our model is B2B2C. So we acquire a client, a restaurant, a salon, whatever it might be, and then we generate members. That is, we call some companies call them users, we call them members. We generate our members through that through the restaurant and the staff, and this brings down our cost of acquisition, our cost of marketing, and it gives us the opportunity to further monetize this group once we acquire them and have them on our platform, which is exactly what we're doing. We have tremendous amount of growth still to happen in the Canadian market. We've got national accounts underway. We've got further monetization of our base. Our engineering team, super well organized right now with efficiencies and groups focused at maintenance and also at R&D and innovation. Our ability to scale our revenue is incremental in cost now that we have this infrastructure built. Our cash flow our goal is to be cash flow positive in about 1.5 to 2 years. And until then, we will be very focused on investing our resources into critical aspects of our business. So we've got this open field of $97.5 billion market, and we intend to leverage it very ambitiously. For those of you new to the story, there's 4 revenue sources that we count on, and that's interchange, transactions, so small transaction revenue. And now we've got the addition of a recurring subscription revenue with our tip pooling. And we also now have, in different verticals, the opportunity to license our platform. Many of you have seen our title slides, our brand slides with, hundreds and thousands of restaurants on our platform. We decided to slice it and dice it a little differently this time to talk about the different areas that we're dominating. So pizza delivery, you can bet if you're ordering pizza, they're probably on our platform. Casual dining, on our platform. Full service dining, they're on our platform. Hotels, we're adding those to it. Sports and entertainment, you already know about those. We're adding more to our platform. And golf courses. These are our growth verticals. We had to blur out some of our logos here. I wish we didn't, but we do, because it's such a competitive advantage for many of these brands in the large venues, further to the ones we've disclosed to you, golf, hotels, and I'll talk a little bit about supply chain delivery drivers, but this is so competitive that, right now we're not allowed to share them, but we are going operational. We have signed a large venue entertainment company, global deal with an entertainment company. And in the supply chain side of things, we've always talked about furthering our verticals, but you can see here that we have a lot to chew. Even in the ancillary call them sub-verticals in the hospitality space, even if you just, to steal Jason's word, even if you just think of what it takes to get your food to the table, right? So you've got napkins and tablecloths and cutlery and dishes and food delivery and so on. And we have signed, we're in contract with a large distribution supply chain where we're working at adding the delivery drivers to our platform for the payment side of things. And staffing agencies, as well, as it becomes more competitive to recruit, staffing agencies will become more popular. And what better way to recruit than by offering EWA using our platform. So the press release you saw today is all about growth. And so Q1 and this year so far has shown a great increase in not only in our GDV, but also our user base. And, we're weighing our goal to profitability with also the idea to continue to invest in this technology. Again, it was always the plan once we had this foundation to continue to build and monetize on this group. We won't be satisfied with less, and we aspire to be leaders. I'm stealing from an industry consulting firm that uses a quadrant to show where you sit in the competitive landscape. So, leaders is our target. And why do we think we can get there? Because our technology is sound. We're hiring industry experts in the space. We know the space really, really well. We already have traction. We have a proven model. We're generating revenue. We're well past MVP. And we now can make data-driven decisions. We are seeing a tremendous amount of data flowing through our platform, and it's allowing us to make some very smart decisions. For 2022, we talked about EWA. This is really critical. It's a game changer. It's super disruptive. And upcoming initiatives, we continue to focus on M&A and integrations. Financial inclusion is a very important term and an important element for our members. So we intend to add products that will support financial inclusion for these up-and-comers, some of them new immigrants, and some of them new to the workforce, and looking for ways to save and be involved in, products and elements that they haven't been included in. And then, of course, we're excited about our MRR with tip pooling and our roll out of that, for which we've seen a really good traction. So Jack, that kind of gives you the background of, the growth that you saw reported on this morning in this morning's PR. And I'd be happy to take your questions or anyone's questions if they have them.
Okay. Yeah. So basically, I think the takeaway is, like, right now the company is at that. It's actually just past the inflection point where you're really starting to get serious traction. I think you shared some of the numbers. The GDVs are going up. I think you've had some days where you're doing north of $2 million a day in GDV. Is that right?
Yes. Yeah, that's true.
So that's a big. I mean, that's a big jump. I mean, that's like, okay. So 2 million a day is what is it? That's 60 million a month. It's a $700 million run rate of GDV. On some of those days. I mean, some days may have been a little bit less. Some days could have been a bit more. But you're kind of in that range at this point.
We are, and that's just with primarily the gratuity management side of things. So you can imagine when we start adding earnings and expenses and so on to our platform, we see a real opportunity for a further spike.
Yeah. So I think the real thing that I find very interesting about the XTM story right now, which I think investors should really be looking at, is, look, right now everybody understands there's a recession, there is inflation, stagflation. There's a lot of cross currents that are really shaking up the economy, and the stocks have been crashing. I'm sure everybody realizes. But that economic environment, that backdrop, is actually very bullish. We've mentioned this on a couple of some of our communications. It's actually very bullish for XTM. I mean, those are very bullish tailwinds for XTM because it's basically driving market adoption in terms of employees. They want right now, because of inflation, with the gas prices so high, they need to get their tips that day. They need cash in their pocket right now so they could fill up their tank, the gas tank, so they can put food on the table. I mean this stuff is actually really like, I think when we first talked maybe 4 months ago, is it 3 4 months, it wasn't so much an issue. It was starting to, but now it's really becoming a major issue. I think in LA there's gas prices like $8 a gallon.
Yeah.
And it's not showing any signs of slowing down. So again, the restaurants, they want to get their employees. Obviously, they want to recruit people and they want to get them to show up to work. And for them to show up to work, they got to get paid so they can fill up the gas tank and all the other basic necessities. So it's really things which I think are important to kind of pay attention to. And probably the GDVs, the rising GDVs that you're showing, is a direct result of that. I mean, it really kind of substantiates that story.
Well, yeah, and listen, inflation is not a happy place for anyone, and we see world events are crazy. So at the same time, I don't want to dismiss that, but I do want to say that life goes on, and people are dining out, and people are enjoying themselves, and really feeling this feeling of social, connection and so on. We feel we are at the right place at the right time. And of course, because we are free to the restaurant or to the salon or to the spa, there's just no friction. It's just a no-brainer for them to bring us on. And we really do believe, as we add more and more to the ecosystem of helping an operator run an efficient and valuable business, that we will become even stickier and create even more traction within the hospitality space. So we're not resting. I said that in our quote today in today's release, is that we're laser focused on our business. We're not letting the market distract us. We figure it'll catch up with us eventually, hopefully sooner rather than later, because we appreciate all the longtime investors we have in our company, and we hope that they see an ROI. but know this, that we are very committed and to our business. And the good news is we have enough cash on hand, and a CFO who's very practical about the way we are committing our resources to ensure that we're optimizing and getting the best ROI, so that money will last us through whatever downturn we see in the market.
I think so. There's a couple things. I mean, when we talk about recession, deflation, etc., the restaurant business is not going away. People are still getting haircuts. There's still things are going to go, and there's also There's actually, you mentioned something interesting. After the pandemic, there's also a lot of new restaurants, a lot of new concepts that have been opening. It's sort of like there's a forest fire. The forest gets burned down. All of a sudden, you got new trees. It clears out the forest, and new trees can grow and grow even taller. It creates more opportunity for those up. So there's going to be a lot. So there's a lot of new concepts that are out there. And by the way, I'm seeing more and more of retail, any type of retail store you go into. They have that little when you check out, there's the thing with the gratuity. I mean, it's like you should check, because people are using the credit cards more and more. So I think restaurants are basically putting on the thing when you check out, like, oh, what would you like to do a 15, 10%? Before it used to be just a tip jar and people they put in a quarter. Now, you feel a little bit like guilty, or like, hey, if you're not putting in that 15 or 20%. I mean, look, okay, so there's this bagel place open up here, and they have their checkout thing. It's traditionally you go to a deli, a coffee shop. Yeah, you get your thing, you pay, and you leave. You don't pay an extra tip. But I'm using a card, and the thing pops up. Do you want to give 15%, 25%, whatever? And I don't even know what to make of it. Is this a new social thing? I mean, I'm not. I mean, when I go to a restaurant, I obviously tip, but I'm not used to tipping. When I don't know, go to Whole Foods, I'm not putting an extra.
Yeah.
15%. I mean,
I think there's a lot of empathy out there too for those that didn't have work for a couple of years because of pandemic. So I think we're all feeling particularly generous. Jack, we're going to send you one of our T-shirts. I think we had a whole campaign where make sure you tip your server. So we're all about that. We're all about being as generous as possible. But it certainly is trending right now for sure, to make sure that we take care of those and we spread the wealth.
Yeah, so it's becoming a bigger thing. Like you obviously would start, I think, with just coffee shops, etc. But it's becoming a bigger thing, because now the restaurants are kind of using that tip, that tip pool to, as an incentive, or to part of the way. It's becoming a bigger and bigger thing. So really, you're really part of a major trend. And I think it's also interesting for investors to note that this is something that's growing. In other words, you're kind of at the at the early start of what's going to be a massive trend in this $1 trillion plus industry, which is, I think the restaurant industry is, I believe, $800-900 billion in the We're only talking about U.S. according to the National Restaurant Association. Then you got services, which I didn't even include. The services is like personal services. That could be, haircuts, dog groomers, lawn, whatever, everything that people use in their day to day. And essentially XTM is it's like Warren Buffett would call this a gross revenue royalty on the whole business. So essentially that whole that whole $1 trillion in revenue, at some point, it is going to shift to your model. Whether it's going to be with XTM, maybe there's going to be could be other companies might kind of come into the space, right? But essentially your business is going to capture this percentage of that $1 trillion, which is going to go flow through your business and flow through the whole business model. So it's sort of like Visa. The Visa business model. They capture 2% of every time, or whatever the number is, every time somebody swipes. These are great businesses that are very very scalable. I think that's the thing. I mean, like whatever you have right now could explode in the next couple of months, and because it could really take off.
And it is actually happening, now we're seeing it, it's this steady climb, and it doesn't require, a lot of effort on our part to be able to support that scale. because we have the infrastructure in place. The two areas that we're spending the most money, where we're focused most of our resources right now, are engineering for further innovation and further monetization, and sales and marketing. So, we've done a lot of what we've done with very little sales support, but we see now the US market as a huge wide open playing field, and we're investing in sales. So brought on, we've quadrupled 5 times our sales staff in the last, call it 3 to 4 weeks.
Oh, really?
And yeah, because the
5x.
5x, yeah.
5x.
Yeah, and the intent is to really get the message out there. And again, because we're B2B2C, that makes the process that much cleaner and more efficient. And so we're leveraging our network. So look for great things to come.
Okay, no, it's a very interesting model. So so basically you've been really getting into the U.S. market over the last, let's call it a couple of months, which is really the main event, right? Like you kind of start off in Canada. Now you're going to a market literally 10, 15 times bigger. And you've signed up. I think you put out an announcement was it last week, a few weeks ago, that you signed up a couple of major restaurant chains. And again, you're dealing with kind of the more sophisticated players. You're dealing kind of with these operating groups, which they understand what you're doing. I think at some point that's also going to trickle down to the mom and pops and everything. But these early adopters are validating the business model, because when some of these guys, when they start using your system, I mean, that sends a signal to the whole industry that this is like the best practice to adopt.
Yes, it is.
So you announced a couple of these big restaurant chains in the U.S. Now, I think you said that you can't announce their names because it's a competitive issue. Like, when are we going to find out? Like, when are we going to get like actual the details? When is that going to come out?
I think that when they get a couple of cycles under their belt, and they feel that they've got it running really smoothly, and they have a head start, then I think we'll be able to begin mentioning names. These are really big groups with really big in-house lawyers and counsel, and we negotiate as hard as we can to be able to market, because we are free. But at the end of the day, we of course respect the wishes of our clients. So it's coming. It's coming.
Okay, so one of the things also is that you mentioned something which is interesting, is that they don't want their competitors to know that they're using your system.
Right. Yeah, they want to be ahead.
Yeah, because I mean, it really it's a major advantage. Again, this recruiting issue is a huge deal right now. The recruiting issue, retention, not just recruiting, retention is the big thing, right? And then of course, we got. I think you mentioned something interesting, which we've talked about a little bit. Is so there's a couple of key value points which make what you're doing really like an absolute necessity for any restaurant if they want to succeed, if they want to stay in business, right? Like, if they actually want to stay in business. So number one is you got the retention. Having your employees, show up to work because they're actually able to get their tips, especially now. They get cash in their pocket. Number two, which is a big thing in the U.S., is this compliance issue. So that once they have your system in place, they don't have to worry about getting a lawsuit 3 years from now from some employee that said, oh well, the tip pool, John was getting X and Susie, whatever, and the manager, so that's not going to be an issue, which saves them potentially from going out of business, and what else is there? What's the other thing? I forgot the third thing. This three big things.
So earnings, also not just gratuities, but also your earnings. Yeah, tip pooling, and the other interesting thing about our tip pooling solution is that it was designed, and it took us course, longer than we expected, but it's because the feedback into it is right from hospitality operators. So it's got, you know, a lot of intel in the way intuitive navigation and user controls that make it stand head and shoulders above some of the other ones we've seen out there. So, and I think that's one of the reasons it's being so well received is, again, you know, we are hospitality for hospitality. So that's one of our key differentiators.
Okay. No, you know, it's interesting. I've noticed, like, in the business you're in, or kind of like, you know, the SaaS business, etc. You know, these niche kind of niche software services that go after, you know, specific niche industries can be extremely profitable, valuable for potential acquirers, you know, etc. What's the market cap right now, fully diluted? How many shares outstanding do you have right now?
Around 170 million.
Okay, so we're at what's the? Should I do the math? Is it like 50 million?
No, today's valuation is less than that. It's Canadian around I believe 25 million, and US probably somewhere around 18. Yeah, given the recent, you know, slide.
20 million. Okay, so yeah, I gotta take remedial math. So $20 million is what is the value of the business. So essentially, if you were looking at this as, you know, as, let's say, Warren Buffett would look at, okay, I'm paying $20 million, and essentially for an opportunity to dominate this you know, niche. And although the word niche is, maybe it's not a fair word, because it's a massive opportunity. I mean, essentially, you're going to be playing a key role in this, you know, $1 trillion plus wave that's out there.
Yeah, and Jack, think about it. You know, just you know, a couple of months ago, our valuation was in the 70 million range, and we are much more valuable today than we were even 6 months ago, because we have that many more clients, that many more users, that many more verticals that we're looking at. So, as per the, you know, earlier message, the market hasn't caught up. There's all kinds of factors beyond our control. I get lots of calls from investors saying, "What's going on?" Well, I don't control the market, but what I can control is our business, or help to control is our business, our user experience, our sales, and we're doing an amazing job there. So, is it a really good opportunity? Yes. And have we had overtures from groups that are looking to acquire us? It's not the time. We feel we've got lots more.
You don't want to do it. You don't want to do it here. By the way, we have some good questions coming out. I want to get to the audience questions in just a minute. We're going to get to the audience questions. But I want to kind of go back to the valuation here. So if you have a $20 million valuation, right? I think as a strategic value, you're getting very close to the point of having roughly $1 billion a year go through your system. I mean, if you have days where you're doing $2 million, $3 million, you know, GDV running through your system, at some point you're going to be at that point where, you know, it's consistent and it's $1 billion a year. Yeah, that's very valuable. I mean, that's a very valuable financial, you know, institution, neobank, what have you, fintech. I mean, because that it's worth, I would say, a lot more than $20 million. I mean, we're going to have to see what the market, you know, is going to value it at when, you know, in a few months when the market's kind of stabilized. Because again, everything has been crashing. I mean, your stock is down, SoFi is down, Upstart, Marquette. I mean, like, everything is all the, you know. So I mean, it's basically it's kind of gone with the, you know, with the sector. Well, maybe actually, I think you've held up a little bit better. But yeah, the sector has definitely been way down in the last, you know, 4 to 6 months. But the great news is, at some point, you know, the value investors are going to come in. Even now, they're starting to come into these stocks, and they're realizing, wow, you know what, this company, you know, they have a significant moat. I mean, what you have, you know, what makes XTM valuable is essentially you're going to have this moat, because, you know, once you have, I don't know, let's say you get to this $1 billion GDV coming through the system, at some point, I think once you have that, the next year is going to be, it's not going to be a geometric, it'll probably be, you know, an exponential increase, because, you know, then all of a sudden it's going to, you know, you know, this thing is going to really spread like wildfire by word of mouth in the hospitality restaurant sector. Is it possible that you can go to, I don't know, 2-3 billion GDV, and let's call it 24, let's say 18 to 20 months from now? Is that how realistic is that?
Our CFO would kick me and say we don't guide, but I will tell you based on comps, competitors in our, not competitors, comparables in our space, we've seen it happen. We've seen it happen where they've gone from where we're at to $1 billion a quarter. Because it happens very, $1 billion a quarter. It happens. It can happen very quickly. Couple factors.
Right.
You have to do what you do really well. Because we're in a vertical that is it works for us and against us. Or they're very close knit. They all talk to each other. They take references from each other. So you got to do it right. You can't do it wrong. If you do it wrong, it doesn't work. But if you do it right, it's the wildfire, kind of the wildfire analogy used where we can move very, very quickly through a market. So, again, we're very focused on doing it right. And the numbers kind of speak for themselves. They start to grow and build. We're seeing that already. But yeah, we can see exponential growth.
Okay. So we're not making any, just to be very clear, obviously, look, you can't make any projections. We can't say, we're going to be at 2 billion, 3 billion, whatever. But give us an example. Okay, so you mentioned there's an example of companies, similar type of comps where they went from numbers similar to what you're doing to $1 billion a quarter. Like, give us some names like that so people can get a reference point.
Well, I could use one example. A company near and dear to my heart because I was involved with them early days is Payfare. Payfare also has seen a slide in a discount from the market, but I mean their trajectory is incredible. Their run rate, they did provide guidance on their Q1, following their Q1 earnings. And I don't want to repeat it because I might get some of the facts wrong, but they are doing $1 billion a quarter in GDV. So they were where we are. Call it. We are where they were a couple of years ago, but there's no reason why the same thing can't happen for us.
Yeah, no, I mean it's a little bit different. They're kind of a slightly different business model and everything. It's
a different vertical, but otherwise very similar. So B2B2C, their vertical is gig economy, whereas ours is hospitality, but and a very unique and specialized fintech platform and user experience. Again, we have that for hospitality. So there are a lot of similarities there.
Yeah, it's a little bit, but I think your opportunity is kind of the bigger. I think it's kind of the much wider market. It's $1 trillion market. So it's something which is going to be really interesting to watch, because I think once you hit those numbers in this sector, especially in the U.S. Market, once you kind of start to dominate this thing, it's going to become very, very attractive for not only investors, strategic buyers, who would be willing to pay a premium because they want to have access to all the $2 billion or more that could be flowing through the system, ways where they could cross-sell the user base. The user base becomes very valuable, cross-selling opportunities there. I'm just scratching the surface. I'm not in the financial services industry, but anybody who is probably understands the value of what this could be. So let's get to some audience questions here. We got some. Okay, here we go. Pete, can you talk about active Today card users? So how many people have the Today card? Are we in the 6-figure area yet?
We are in the 6-figure area for sure. There's a couple of ways we qualify active users. So for our reporting, active user means you've had a load, like a monetary load in the last 30 days. That's a stringent check mark, if you will. And so I think that number is probably around the 70,000 mark. If you look at the group, the number of people that have cards with a balance on those cards, it's well north of 100,000.
Okay, so yeah, this is very exciting. Okay, Chris says, can you give us guidance for revenue 2022?
I'll leave that to our CFO. If you want to book a meeting with us, you know how to reach me. I'd be happy to have that conversation. with you. It would require an NDA and that kind of thing. So I won't do that on this forum. We expect to see, strong quarters. We expect to see. We expect to continue. I said this was a growth story, and it is a growth story. So we do expect some positive news.
Okay. So far, the trajectory of the news has been very positive. I know nobody wants to give guidance anymore. Like this is in this market, like everybody's trying to, which makes a lot of sense, which is very fair. Let me see. Okay. Can you talk about the UK? The UK market.
So we have an opportunity right now in the UK that we're looking at. We're assessing it. We model everything out. We've become pretty sophisticated about the way we approach opportunities. And so on our priority level, we would go at it with a partner. And so we wouldn't replicate our entire platform because, again, when you enter a new country, it's almost like rebuilding the company, cloning the company all over again, which takes a lot of resources, a lot of money, and you have to weigh the options. So we're very friendly with a group there that we met through another project, and we're assessing that opportunity now. So more to come on that, on the UK.
Okay. Let's see. Okay. So what's okay. So we're going into already it's going to be July, August. What kind? It's going to be, the summer is going to be relatively slow. So investors are looking for they're looking for any type of hope in this type of down market. So what kind of news flow? What kind of news flow can we expect to see from XTM over the summer? Can we expect some exciting activity in this market?
Yeah, so we expect to have a very busy summer. We've got a couple of really stringent milestones for our company that, everyone at XTM has the option to be a shareholder. Almost, I would probably say over 90% of them are. So we're all gunning for this target, which will be an announceable target. We also have a lot of onboardings happening. Like it's super, super busy. Our office used to be teeming with boxes and people stuffing boxes to get onboardings happening, and now that's all automated, so it happens from the manufacturer. They get their cards issued and so on. So I don't see as much of that going on, but we see it in the numbers. So we will be able to announce. We're working very hard at the engagement stage and contractual stage to be able to name our clients, because we know you guys are all looking for that and waiting for that, and we want to tell you. So we're putting a concerted effort forth to be able to name those clients and new verticals as well. We hope to be able to announce a new sector.
Yeah, no, I think so. I think what also something that we should mention is, okay, so you mentioned you hired basically your sales team increased 5x in the past couple of weeks, right? So there's 5 times as much people out there pushing the story to the restaurant services industry. I mean, I don't know if you can extrapolate, but basically in theory, if you have 5x number of salespeople, you might get, I mean, I would think, okay, 5x the revenues or the metrics you're doing now. I mean, is that fair?
That's the plan. That's the plan. Our targets have, as we add more and more salespeople, our targets increase. So we actually have a meeting on that early next week to talk about those moving targets. Because we see, we use a CRM, and that CRM is just now super robust. We've got, an inside salesperson, a sales operations person too, that's filling that database. We generated a lot of leads from the Restaurant Canada show, from the NRA show in Boston, and all of that is bubbling up now. And yeah.
I think that's the main. Okay, so this is a very important thing to focus on. So essentially, because your sales team increased in size by 5x, again, salespeople, not everybody, we know how it works. But the reality is, if somebody doesn't work, you get more people. But in other words, the system is in place basically now that we could expect potentially to see a if we extrapolate, from what you have now, 5x in terms of metrics, a 5x increase from the metrics, and I guess that would place you into, like you said earlier, sort of in that same trajectory as this Payfair, right? Very similar. Is it? In other words, is your sales team today the size of their sales team was at the time when they went to this? Is that, I'm just trying to draw the connection.
Yeah. Yeah, and that's probably where the two companies aren't super similar, because they actually only have one business development executive, and he's been able to, through relationships, been able to garner the business that they have. We're a little different because we have hundreds and thousands of clients, and so it does take a little bit more effort there to sign them. But I think it is fair to say that as we invest, if we're smart and we're investing in sales folks, we should see an ROI. If we aren't, then we're not hiring the right people, right? So
I think, Marilyn, like up until recently, I think a lot of your early business was more of it was like word of mouth. You got from word of mouth, and some of your executive team probably had contacts, so you got. But now you could really start to. Is that correct?
That is correct. Yes, we've leveraged our network and the fact that we've hired from inside hospitality. We've leveraged that. We're still hiring from inside hospitality, although we're weighing it. Some with sales experience, maybe not in hospitality, and others with hospitality background. So, but yeah, it's we're pretty ambitious about what we think we're going to be able to do in sales, especially in the US. See, like you said, it's 10 times the market. So Canada, and the one, actually just one more point, Jack, is I don't want to discount Canada. Jason reminds us how unique the Canadian market is and how much there is still to garner from this market. We've only just begun in Canada. There is so much more here to do, and we don't want to forget about that. So we are keeping a team focused on further monetizing at broader and deeper is kind of the mandate we have out. But again, another team focused on the US.
Okay. Interesting marketing suggestion or IR suggestion. Okay, so if you had a restaurant counter on your website, could you add a restaurant counter on your website that'll sort of new additions?
Creative idea. I'll take that to the team.
Yeah, no, it's interesting. No, we've seen companies. It would be kind of clever. Okay, so bottom line is, this summer we should see some over the next couple of weeks ahead. We should see some news announcements about new contracts increase. I'm not saying. Yeah, I'm assuming the metrics are going to be increasing. I don't want to put anything in your mouth, but we should be seeing news on metrics, new contracts as a result of this team, because you have deals right now going through this pipeline. I mean, the pipeline is filling up, and we should expect to see signings coming out of it.
That's right, exactly, and we should expect to, as the restaurant industry starts to surge, which we're seeing now, again with more restaurants opening and more people dining out. That affects us literally within a week. We can see the impact of a busy weekend. So a busy weekend, like for example, this 4th of July weekend, we can see the results of that next week.
Okay. Now that'd be very interesting, because right now everything is really, everything is packed. I mean, you go on a plane right now, it's like packed. Everything is. Yeah. People are they're spending money. So
they're spending money, yeah.
And all that spending at some point will flow through XTM.
Yeah, not every single last dollar,
but the big picture in the service industry, if you establish a dominant position like a Visa, MasterCard, Amex, those three companies, they basically get it. Whatever it is, a 2.5%, 3%, gross revenue royalty on that whole sector.
Yeah, that's right. Exactly. Yeah, that's right. And so you're right, Jack. So you can start using that metric too. We're taking half of that network interchange fee. And as that business, as those transactions surge, so do we.
Yeah, no, it's very, very exciting. Okay, Marilyn, on that note, I want to thank you. Thank you, everybody, for joining us. Sorry about the little internet. We had some little issues that got resolved, it looks like, apparently. So, and we're going to catch up with you. I think, let's say in about 2 weeks, we should get together for an update. Hopefully, we'll have some more news to talk about, some new contracts. Ideally, that'd be great to show, traction. The U.S. market traction starting to get rolling.
Sounds good. Thanks so much, Jack. Thanks everyone for joining.
Thank you, Meryl. Thank you, everybody. We'll see you on the next live stream.